If you're planning on using the VA loan in 2023, this video is going to give you a deep dive into everything that you need to know, from general knowledge to squashing some myths to really giving you a full grasp on how to take advantage in this current market. Everything I'm going to talk about in this video is available for you to download for free in my free ebook. All you have to do is click the link in the description below. You'll see the resource guide. It'll have a full checklist on everything that's going to allow you to know where to be and what to be prepared for from the time that you start your home buying journey to the time that you move into your home. You'll know how to build wealth using the VA loan and really so much more. So if you want to get those resources available to you, click the link down below. Also, not so fun fact, did you know only 20% of veterans have used the VA loan? Why do you think that is? Comment below. I'm curious to know your guys' thoughts. So who's eligible for the VA loan? Well, someone who served in the Army, Navy, Marine Corps, Air Force, Coast Guard, Space Force even, National Guard. Really, any form of military service is what's going to allow someone to be eligible to use the VA loan. But there is one other way someone can use the VA loan if they themselves are not a veteran, and that is going to be a surviving spouse. A surviving spouse would have been someone who is married to someone that passed away while on active duty or due to something that was service connected. So why should you use the VA loan to begin with? Well, the most popular reason a veteran would do it is going to be the down payment requirement. The VA loan has a no down payment requirement, where the most popular other loan someone would be using, like a conventional loan, is going to require you to at least have 3%. FHA, 3.5%. Sure, there is USDA that's out there where they do have a zero down option, but their guidelines are a lot more stricter than VA loans, which means someone wouldn't qualify for nearly as much home as they would with a VA loan when they did try to use a USDA loan. The next reason someone should consider or should use their VA loan is definitely going to be mortgage insurance. You see, as I mentioned, conventional having that 3% down minimum, if you're going to put down anything less than 20%, you're going to have what's called private mortgage insurance. This also does apply to FHA as well. Private mortgage insurance is a premium that your lender is going to require you to pay for on a monthly basis. It could be upwards of $100 to $200, even $300 a month. And it is in place in case that you default on your loan. So really, it's there just to protect the lender. It doesn't even protect you at all. And the next reason someone should use the VA loan is going to be qualifying standards. Every loan has its own set of guidelines, and each loan has different guidelines that make the loan either more strict or more lenient. The VA loan is by far the most lenient qualifying standards that exist. All those other loans are going to have what's called debt-to-income ratios, which means that depending on how much money you have coming in versus how much money you have coming out in debt, that percentage is going to limit your ability to qualify. The VA loan actually does not have a debt-to-income ratio attached to it. They use a little thing called residual income, which is something that is set based on your household size and based on your region. So if someone were applying for a VA loan, they could actually qualify for a lot more than doing an FHA or conventional loan in that circumstance as well. Before I jump into how to get started with the VA loan, if you've gotten any value from this video so far, do me a huge favor, hit the like button and even consider subscribing. This channel is created to provide you with value on the real estate and mortgage space, specifically regarding the VA home loan benefit. All right, so how do you get started with using the VA loan? The first thing you need to do is get your certificate of eligibility. There are 3 ways that you can do this. One, you can go online to the VA website. You can fill out a form, submit some documents to them, and they'll be able to get that over to you. Another way is you're filling out the same form, except now you're actually going to mail that form into the VA. This is definitely the slowest way to do it. The quickest way to do it is really just talking to a VA specialist. If you want, I can pull your certificate of eligibility for you for free. It is pretty easy to do, and it is actually pretty quick. In most cases, I could have it for you in less than 1 to 2 minutes. Sometimes there is going to be documents that the VA is going to require me to get from you, but more than likely, I'm going to be able to get it for you within about a 2-minute phone call. The next thing you need to do is get pre-approved, not pre-qualified. There is definitely a difference, and you want to do this with a VA loan specialist. You don't want to just talk to someone who does mortgages or who is a loan officer. You want to talk to someone who specializes in the VA home loan benefit. A great way to vet your lender and find out that you're in the right place is really by asking them if they can pull your certificate for you. As I mentioned earlier, you can do it yourself, but what your lender should be able to do is get it for you. If they do not have the ability to get your certificate or they ask you to get that for them, that should be a huge red flag and you should go find someone else. Another thing I think you should do is simply ask them how many veterans they've helped successfully achieve homeownership. Ask them how much of their total business is working in the VA loan space. The difference between getting pre-qualified versus pre-approved is really like this. Pre-qualified, you're only submitting an application. Sometimes it's even just done over the phone, and your lender is going to pull your credit, go based off of what you say, and they're going to tell you exactly what they think you might qualify for. A pre-approval is going to be that and then so much more. They're going to do the loan application, look at your credit, and also going to need some documents from you like pay stubs, tax returns, W-2s, bank statements, and any other pertinent documents that could pertain to your qualifying ability. When they verify all of those things is when you would be pre-approved. All right, now that you're pre-approved, the next thing you want to do is work with a VA knowledgeable real estate agent. In the VA guidelines, there is a chapter called minimum property requirements. And if a real estate agent does not have a solid knowledge of what those requirements are, they could be having you waste your time on looking at properties, or even worse, going under contract for a property that would have never passed under the VA loan. So you got your certificate, you got your lender, got your pre-approval, and you got your realtor. The next thing to do is to go look at homes, right? Wrong. The next thing that you're going to do is create what's called a short list. The short list is pretty much that old T-chart that you used to create in school, where you used to have things on the one side and things on the other, kind of like a pros and cons list. The difference is you're going to have one side say needs list, the other side is going to say wants list. The needs list is going to be all of the things that the house must have before you even go look at the house. The other side is going to be more of the wants, the things that you would like to have, but if it didn't have all of them, it's not a big deal breaker for you. Those are going to be other items on the other side of that list. Once you have that short list, you're going to be able to narrow your search even more and know what homes are even worth your time before you go driving all around town to go look at every house under the sun. And if you want to try to create a no closing cost situation, what I would advise you to do is connect with your real estate agent to look at homes that have been on the market for over a certain amount of time. One of the things that I look for is homes that have been on the market for at least 60 days. It's not that I completely ignore homes that have been on for less than that time frame. It's just that once a home has been on the market for at least 60 days, I know that the seller may have a little bit of pain here, which means that I could have the ability to negotiate a little bit more with the seller versus someone who just listed their property less than a week ago or even a couple of days ago, and they're going to pretty much kind of be set in the water or set in stone on what they expect here. So now you found a home that you and your family love. What is next? Well, you are going to complete a purchase contract. And on that purchase contract is going to be how much you're offering to buy the home for, along with other things pertaining to a real estate transaction as well. If your goal is to build wealth through real estate, the VA loan is one of the greatest vehicles to do it. You see, the VA only requires you to live in the home for 1 year. At the end of that first year, you can rent that home out and do it all over again. One of the major things I advise veterans to do is consider how long they plan on being in this home. Because if this is not going to be your forever home, then I want you to think more of a temporary mindset than a forever mindset. What I mean by that is, instead of buying more house, see if you could possibly buy less. Buying a little bit less home sets you up for the next one. It's less money that you spend every month, less money that you even possibly spend on closing costs. I have a client of mine who I helped buy 3 properties, all with the VA loan, all at 0 money down, and he now lives in one of them, and 2 of them are rental properties for him. Another option you can do with your VA loan is also buy multifamily property. If you want to buy a 2, 3, or 4 unit, you can do that with your VA home loan. The VA only requires you to live in one of those units, which means that if you bought a 4-plex, you live in unit 1, you can rent out unit 2, 3, and 4, and use the rental income to cover your mortgage payment. The last thing we're going to talk about are loan fees. Lenders have the ability to charge you for different things just to do your loan. In most cases, people would look at that as normal, right? It's just the cost of doing business. Loan fees could be things like loan underwriting, processing, credit report, application, loan origination, and so much more. The point I'm making here, though, is those fees are actually not required. If you work with me and my team, we don't charge any fees to originate a VA loan whatsoever. And there's other lenders out there that do the exact same thing. My point is, you need to know exactly what's being charged to you before you jump into the process with a particular lender. Some of the biggest myths around using the VA loan are veterans thinking that they can only use it once. That is definitely not true. You can use it as many times as you want. Another myth is veterans thinking they can only have one at a time, and that's also definitely not true. As I just explained earlier about my wealth building scenario, veterans can have multiple VA loans at the same time. It's just depending on how much entitlement they have available. The biggest difference maker for you and your VA home loan benefit is going to not only be your mindset, but also the team that you surround yourself with. Having that VA lender and having that VA knowledgeable real estate agent is going to be the biggest difference maker from a veteran who was trying to buy a house to a veteran who did buy a house.